My name is Marc Saurborn. I'm the Chief Investment Officer of Dividend Assets Capital. Today, we're lucky enough to have the CEO of WD-40, Stephen Brass, the CFO, Sara, Hyzer of WD-40, and the Director of Investor Relations and Stakeholder and Investment Engagement, Wendy Kelly. So the format's going to be, WD-40 is going to give the audience a brief presentation, and then we're going to have some Q&A. We'll certainly allow the audience to ask any questions they may have during this process. It should be sort of an interactive and fluid sort of exchange. So without further ado, let me turn it over to Wendy, Stephen, and Sara.
Thank you, Marc. It's funny, I just noticed because we all came in on the same link. All three of us are Stephen Brass, CEO of WD-40 Company, on the nameplate. So I am not Stephen Brass, CEO of WD-40 Company. My name is Wendy Kelly. I'm the Investor Relations Vice President here. And the second lady on the call is not Stephen Brass either. That is Sara Hyzer, our Vice President and Chief Financial Officer. So thank you, everyone, for having us here today. Just before we begin, I'd like to remind everyone that today's call includes forward-looking statements about our expectations for the company's future performance, and actual results could differ materially. So please do refer to the disclosures on this slide for further information. Today, we'll be sharing some background information about our company and some history about our company, and talking about our growth strategy and giving a brief financial overview. The theme of our presentation today is unlocking value, because as we look around the world, we see a significant growth opportunity for our iconic WD-40 brand. Steve and Sara will share with you how we intend to unlock that opportunity, which we believe will unlock significant value for our stockholders. We believe WD-40 Company is a compelling investment opportunity for the following reasons. We deliver consistent performance across all relevant metrics. Our growth opportunities are significant on both the top line and the bottom line. We have strong gross margins, which are significantly higher than most of our peers. We generate superior returns on capital. In 2024, our fiscal year 2024, our return on invested capital was 26%. We have a strong balance sheet, and we consistently generate significant cash flow from our business. We're dominant in our industry, and we do have a sustainable competitive advantage. And we have a depth of talent within our organization. Our leadership team is made up of a highly tenured team with diverse mix of competencies and backgrounds, and many of them have been with our organization for decades. So our company is headquartered in San Diego, and it has been here since our founding in 1953. Our founders formulated WD-40 multi-use product to help solve a problem associated with the Atlas space rocket program. Convair was headquartered in San Diego, where we have a lot of moisture in the air, and they needed a water-displacing formula to use on their rockets. The product's name comes right out of the notebook the chemists were using to develop the product. It took the chemists 40 attempts to get the water-displacing formula correct, and so you have WD, water displacement, 40th formula. In 2024, sales of our signature product, WD-40 multi-use product, reached $453 million, an 11% increase over the prior year and a new record for our core brand. We have a very simple motto here, which you'll hear Sara talk about in more detail shortly. Few things, many places, bigger impact. Accordingly, nearly 90% of our revenue is generated by WD-40 brand products, which are comprised of WD-40 multi-use product and our WD-40 specialist suite of products. We sell these products in a very unique distribution network that includes 176 countries across 62 trade channels. So with that overview, I'm now going to turn the call over to Steve, who talked to you about our strategy.
Thank you, Wendy, and good afternoon, everyone. With our 4x4 framework, we really have a simple strategy. 4 must-win battles to drive faster global revenue growth, and 4 strategic enablers that support execution and drive operational excellence. Today, we'll talk to all of our must-win battles and strategic enablers, but with particular focus on our largest growth opportunity, geographic expansion of our multi-use product. We'll also give you an update on our progress made against gross margin and how we expect to drive operational efficiencies as we increasingly leverage global synergies going forward. It's quite amazing to me that at 71 years young, the growth opportunity for WD-40 multi-use product around the world remains so significant. To generate that growth opportunity, we use our own internal benchmarking algorithm, which uses the USA as our benchmark market and illustrates the market potential around the world based upon purchase price parity and adjusted GDP. The algorithm represents a long-term view of our growth opportunity and should be taken by investors as directional long-term potential. We have several other key markets that are approaching the benchmark set by the USA, which gives us confidence in the benchmark. Basing our benchmark on the USA means the US is excluded from the above growth opportunity. In reality, of course, we've continued to grow the USA with a past 5-year compound annual growth rate in maintenance products brand sales of 6.8%. Indeed, the USA in dollar growth terms has been the fastest growing market for us in dollar growth terms, with revenue growth on maintenance product sales of $55 million over the past 5 years. The USA at 35% of global sales of multi-use product gives us an extremely strong foundation to grow from internationally. Investors may already be familiar with this slide showing the relative size of the growth opportunities we have around the world on our core product based upon our growth algorithm. The relative size of the bubble represents the size of the growth opportunity. At the very least, this analysis shows us where to allocate time, talent, and treasure in order to drive the fastest growth. In the new emerging multipolar world we live in, we don't believe in putting all our eggs in one geographic basket, rather in a focused diversification strategy, prioritizing the top 20 opportunities we highlight above. In recent years, we've taken several steps to accelerate growth in many of these high potential markets. Our second revenue battle is to accelerate sales of premium formats of our multi-use product. In FY24, sales of our Smart Straw and Easy Reach formats combined increased by 11%, or approximately $20 million over prior year. We've consistently delivered strong growth in premium formats with a 5-year compound annual growth rate of 11%. Our expectations going forward are to continue to deliver double-digit growth of 10% plus on premium formats. Our premium formats delight our end users, but also help us drive margin expansion. With premium format sales representing about 40% of global unit sales on our core product, there's still significant upside for growth, especially in Asia Pacific and within our distributor markets. Through our WD-40 Specialist line, we aspire to achieve category leadership and increase our market share by leveraging our core brand equity. For fiscal year 24, sales of WD-40 Specialist were up 11% or $7 million to $74 million. Over the past 5 years, WD-40 Specialist has been our fastest growing brand with a 5-year compound annual growth rate of 14%. We target growth of 15% plus on a go-forward basis. We're only just really getting going on WD-40 Specialist. We deploy a similar growth benchmark algorithm on Specialist, leveraging our success in our benchmark market of Australia as our benchmark. Our Australian team have set the benchmark on what is possible on WD-40 Specialist with sales to our core multi-use product of 38%. Our benchmark assumes all markets operating at that 38% to multi-use product sales level and generates a market potential on the WD-40 Specialist range of $605 million as compared to our FY24 sales of $74 million. We now have several key markets that are approaching similar penetration levels to Australia, which once again gives us confidence in the validity of this long-term potential of the battle. We view digital commerce as the accelerator for all of our other must-win battles. Our digital commerce strategy is not just about driving online sales, it's about building our brand in the digital space and accelerating all of our other must-win battles. For fiscal year 24, global sales within the pure play e-commerce channel grew 12% over prior year. A highlight of our digital efforts this year was the expansion of our global online marketing campaign, the Repair Challenge. This initiative, which now spans over 40 countries, exemplifies how we can leverage digital tools to build our brand globally while promoting sustainability. So what does that mean for our future growth ambitions? Going forward, we expect to build on our historic consistent delivery of growth on our focused maintenance products, which have delivered growth at a constant currency over the past 10 years of 6.4% as a CAGR. As we seek to divest most of our household brands and focus in even more on our significant organic growth opportunities around the world, we'll target growth in the mid to high single digits range. We're very clear where that growth will come from, with growth expected from our Americas division of 5 to 8%, 8 to 11% in our EMEA segment, and 10 to 13% in our Asia Pacific segment. Of course, the real key to unlocking value is by taking care of our people. At WD-40 Company, we've long held the belief that first you build the people, then the people build the business. Our greatest asset is our 644 employees spread across 16 countries. We strive to be an employer of choice, where all employees bring their best selves to work. In fiscal year 24, we conducted our first biannual employee engagement survey since new leadership assumed their positions. I'm very proud of our 93% engagement score, a testament to our strong culture and the opportunities we provide to our people to learn, grow, and succeed. Our success is accelerated through global collaboration and our bold ambition to become a true world-class global learning organization. I'm equally proud that we've now gone public with our sustainability targets after a very in-depth process of putting together our science-based roadmap for achieving carbon reduction. Many of our global employees are passionate about pivoting our organization to a more sustainable future, and I strongly believe that setting external targets will galvanize the organization to make significant progress in future-proofing the organization. With that, I'll now hand over to Sara, our CFO, to address how we intend to drive operational efficiencies in our business, as well as to address progress made on gross margin, as well as other financial aspects of the business.
Great, thank you, Steve. So today I'm going to start with our strategic enabler number 3, which is to achieve operational excellence in the supply chain. Through this enabler, we continue to pursue operational excellence. And this year we adopted a truly global approach to our supply chain strategy for the first time. We've undertaken several key initiatives that support this approach, and in-depth analyses have revealed that significant opportunities for cost reduction and efficiency gains. By strengthening the global partnership that we have with our key suppliers, we've been able to drive efficiencies that have translated into cost savings. Notably, we've reduced our inventory levels by approximately $7 million and maintained an average on-time and full delivery rate of 95% for fiscal year 2024. The cost of our can is impacted by various input costs from petroleum-based specialty chemicals and tin plate, both of which are subject to commodity price variability. In addition, with a fully outsourced model, we work with many third-party manufacturers to fill our cans all over the world. You'll see here that we have made significant strides in our gross margin recovery, achieving an increase of 240 basis points compared to the previous year. This improvement is largely attributed to our strategic focus on selling more products in our higher margin regions and prioritizing the sale of higher margin premium products. We also saw a decrease in costs of our specialty chemicals compared to last year. Additionally, by reducing our inventory levels, we were able to lower our distribution and warehousing costs year over year. We have numerous initiatives in our supply chain pipeline right now aimed at driving further efficiencies. However, I am particularly pleased to report a 430 basis point gross margin improvement over the past 2 years. And finally, our fourth strategic enabler, which is to drive productivity via enhanced systems. We've been laser focused on identifying and implementing systems that streamline our operations, deliver actionable insights, and drive value. By leveraging automation and AI, we aim to optimize our processes, reduce manual labor, and ultimately enhance our bottom line. A key milestone for us this year was the successful rollout of our new ERP system across 50% of our business. While we encountered some initial challenges, we've swiftly adapted and learned from the experience, which we will expect will result in smoother implementations moving forward. As Wendy mentioned, this has led us to leverage WD-40 Company's long-standing strength, focus. Fewer things, many places to drive bigger impact has historically been an approach central to our product strategy, and we continue to embrace that as we plan to divest our household brands in the Americas and the UK, as Steve had mentioned. We are now extending this mantra further into our systems and processes, striving for greater global collaboration to enhance operational efficiencies. We are focused on standardization and processes like project and portfolio management, along with streamlined approaches to solution-driven decision-making. Lastly, we've established a foundation recently to move with more intent toward productivity improvement by establishing global centers of excellence along key areas of IT to bring once two disparate teams together to harness the collective skills and capacity to focus on our long-term growth objectives. And now a quick overview of our fiscal year 2024 financial performance. These results highlight the company's strong financial performance with significant growth in net sales, improved gross margins, and increased profitability. We experienced game-changing growth of 10%, executing on our Brazil distributor acquisition, along with strong execution against our 4x4 strategy. As I mentioned previously, we did see strong gross margin recovery, which drove growth in our operating income of 7% over the prior year. The positive trends in operating income and net income further underscore the company's robust financial health and its ability to deliver value to stakeholders. Turning to our capital allocation strategy, we first begin by reviewing our overall growth targets, aiming for both revenue and earnings growth in the mid to high single digits. Following this, we assess our maintenance capital expenditure needs, typically requiring only 1% to 2% of net sales per fiscal year. We then allocate funds for our dividend payments, targeting distribution of more than 50% of earnings. After that, any remaining capital is directed towards the highest return alternatives. Our strategy is designed to balance long-term growth investments while delivering strong returns to our stockholders, with a target return of invested capital exceeding 25%. Our historical cash returns to stockholders have included regular dividends and share repurchases. At the top of this slide, you will see a history of our dividend payments over the last 5 years, including the dividend payout ratios for each of those years. The company has a long history stretching back over 40+ years of paying dividends without interruption. We remain committed to returning capital to stockholders through regular dividends. And earlier, well, I guess it would have been in December, we announced that our board of directors elected once again to increase that dividend. At the bottom of this slide, you will see the amount of share repurchases we have completed over that same time period. We have focused on using our cash in the most accretive manner, and over the past few years, we have opted to pay off much of our higher interest rate short-term debt in lieu of buybacks. We have been and will continue to be active in the market, and we expect repurchases to at least offset the shares that we issue in any given year. WD-40 Company delivers unique, high-value, and easy-to-use solutions for a wide variety of maintenance needs in workshops, factories, and homes. Our iconic brand and category leadership provide a solid foundation for resilient and sustainable profitable growth. Additionally, the company generates significant cash flow. We follow an asset-light strategy and maintain a strong balance sheet to maximize those stockholder returns. We have a highly engaged culture and deep organizational talent, as Steve mentioned, and we are well positioned to capitalize on significant growth opportunities. We believe WD-40 Company represents a compelling investment opportunity. And with that, I'll turn it back to you, Steve, to wrap it up.
Thank you, Sarah. So that concludes all of our prepared remarks, and we'd now like to open it up for any questions you may have.
Terrific. Steve, Sarah, and Wendy, thank you so much for participating today. So really appreciate your time. I'd also like to invite the audience, if they have any questions, to ask their questions as well. I'm going to do my best to try to answer them. I have a number of pre-prepared questions, so we just get started. You talked about, certainly one of the last slides talked about your fiscal 25 financial guidance. And, there's some things that, I know we're in the process of selling or divesting the home cleaning business. Can you discuss some of the puts and takes there, absent that divestiture, that kind of would put you either the lower or the upper end of the range, given where we are in the fiscal year?
Yeah, thank you for the question. And yes, we did give guidance without those brands included because the timing of any transaction was, is not certain. And so we wanted to try to take some of the noise out. And we also have tried to be very transparent, showing both the results with and without those brands in the results that we have last year, but then also in Q1, so that investors can see it with and without. The things that could get us to the high end and even the low end, the business is very much can be driven at the end of a year, at the end of a quarter, based on promotional activity, based on the level of volume that shifts into our purchased volumes with our marketing distributors. And so depending on the timing of some of those orders, that can lead us to the high end or the low end of our range, depending on from a top line perspective. From a bottom line perspective, it's also currency is probably one of those headwinds for us when we look at the year. And so, when we look at the low end, right, if currency starts to stays at the points where they are now, I think that would be guiding us to the lower end of the range. If the currency and the currencies we're most exposed to is primarily the euro, Mexican peso, a little bit on Brazil and in China. And so we have some puts and takes. Currency was actually positive for us net in the first quarter, but if we forecasted out for the year, that can swing us. I always like to remind investors that our EPS, just given the number of shares outstanding, can be very volatile. So it doesn't take a lot for us to move EPS by a penny. When I say a lot, it's like $130,000, right? So if you think about a $600 million business, EPS moves, it can move a penny on 130. So we tend to have a fairly wide range because that's not a material number to us. And so we want to make sure that people can appreciate that EPS can swing pretty dramatically depending on, just given the amount of shares outstanding.
Sara, can you talk about how your manufacturing strategy, manufacturing base helps to offset some of that currency and maybe local factors?
Yeah, so we have a very diverse supply chain strategy. As we've talked about, we do outsource 100% of that. So you saw the fill fees make up roughly a third, right, of the cost of the can. We have a strategy of manufacturing as close to the end user as possible. So when we talk about that currency exposure, there is some natural hedging that happens. So we manufacture in Mexico for Mexico, we manufacture in Europe for Europe, Brazil for Brazil, China for China. So there is some natural operational hedges, and obviously SG&A costs are also in local currencies as well. So that helps us, but irregardless, we are still exposed from a currency perspective to the bottom line.
And seemingly a popular topic now, most earnings calls, it sort of insulates you from tariffs too.
Yeah, I wouldn't say we are 100% insulated. We are definitely way better off than other organizations might be who have more of a centralized or even just they only manufacture in one place and have to import and export all over the world. Our biggest exposure really is retaliatory tariffs. So we do manufacture in the US and export into Canada. So if Canada decides to retaliate with anything, we might be exposed, but it also depends on what they retaliate with. Same thing with Mexico. While we manufacture in Mexico for Mexico, just given the cost basis, we actually would like to manufacture in Mexico for the US and build and do that more. But that tariff situation will dictate how much of that strategy plays out over the upcoming years.
Yeah. And then maybe talking about a little bit about, it's been topic past couple of quarters, talking about the divestiture of your home care and home cleaning business. Can you discuss kind of some of the details? What is sort of the kind of minimum requirements to getting something done? And do you think it would likely go to a single buyer, or you think it's going to be more fragmented? And then the last most important thing is, what do you envision would be the use of proceeds of the sale of that business?
It's not fair. I'm getting all the questions right now.
I have others
Steve likes
Steve, I
this.
promise you.
He likes this. No, there's a lot there. So please, if I don't get to something, jump in. So the home care and cleaning line, our focus is to try to find a single buyer. It has been the focus all along. We are really doing this to free up capacity within our four walls. And distraction for us is challenging because we are a lean organization. So we were focused on a single buyer. We have been harvesting these brands for north of 10 years, and the revenues have declined in line with our decline in investments, right? So there's a direct correlation there. These brands have really stayed fairly strong considering how little investment we've put into them. So there really is brand recognition and brand strength there. It does take the right buyer to see the opportunity, and with the right investment strategy, the opportunity to turn these brands around. So that's kind of why it's been taking some time. And your question was also on the proceeds. So we are not disclosing at this point what we plan to do with the proceeds, but we are looking at alternatives of both near term and then long term. How do we, for us, reinvesting back into the business is a P&L investment. As I mentioned, we don't need a lot for CapEx. And so we always are trying to navigate that tunnel of how do we have the right level of investment by also growing the bottom line. And so we are balancing that reinvestment back into the business to make sure that we're also able to deliver bottom line growth.
That's a great answer. I'm going to shift a little bit. So I have other questions for Sara, but I'm going to shift to Steven.
I'm going on mute then. Thank you.
I just need to take a little bit of rest. Maybe talking about, I'm really intrigued to learn more about your digital commerce strategy. And I know it's becoming more important for WD-40 sales. Can you talk a little bit about maybe some kind of concrete examples? And one of the things I was struck by, and I probably should have done this before, but I looked at your full catalog, and I don't know the number of SKUs that are in there, but it's like 72 pages, and there's certainly products I've never seen on the shelves before. So is that you able to offer that, or is that more of a regional opportunity for you? Maybe talk a little bit about some of your successes in that, enhancing the digital sales.
Sure. So in terms of just briefly on the product kind of range, right? And so 80% of our business is the core product, the WD-40 multi-use product. And, within that, there are multiple kind of SKUs. And then out of the remaining kind of, 20%, 15% of those sales approximately is WD-40 Specialist. And so typically in any one market, that's a range of 20 to 30 products in any one market. And so typically you're looking at an entire product range for a market of maybe 50 to 70 kind of SKUs. And so, digitally, we've learned over the past years, it's quite surprising to think about a 71-year-old brand, but WD-40 is a real digital brand. People love to tell stories about our brand online. And so it lends itself very, very well to peer-to-peer recommendation. And so, if you just Google WD-40, there's all kinds of stuff online. People recommended uses from the weird and wacky to the extremely practical. And so we kind of tapped into that dynamic, and as opposed to us advertising at end users these days, we kind of help them, right? We help them find information. People go in and search for common maintenance products, and we know, because we're so focused on our kind of niche and our world, we really know what they're searching for, and so we're able to leverage those keywords to serve up top class content, and then link in. I mean, a lot of actual product research these days, people just go straight to Amazon, right? I think 60% plus of all product search goes via Amazon. People just go to Amazon and then put in WD-40, right, as well. So or maintenance problems. And so leveraging that kind of digital, outside of e-commerce sales, really people kind of informing themselves about your product, viewing content, answering their kind of query in terms of specific maintenance problems and serving up a particular solution, whether that be a multi-use product or WD-40 specialist. We've become really good at that over the last 5 to 7 years. And so that is a big driver of building our brand. And, I think other ways we've leveraged digital kind of tools. I think about pre-pandemic, we used to do, tradespeople are a big part of our business. So professional use is about 70% of the volume sales, right? And so 15% of our users, trades and industrial users, using about 70% of our products. And so really making sure that we're converting, those new users, they come into the market. And so we've always done quite a lot of work with trade schools. And then, pre-pandemic, we used to go out in the US only and visit about 6,000 people and have contacts and training those, in place. The pandemic came along, everybody was looking for digital content, places were closed down. We quickly pivoted to provide digital training courses. You fast forward 3 or 4 years. And so now leveraging digital content, we're able to reach like 15 million tradespeople around the world last year. And so you can see the scalability of building our brand digitally around the world. And that's going to more and more countries as a truly global brand now.
Well, that's amazing because you just see the number of SKUs. Like I saw in one of your web, and if anybody on the call hasn't been to the website, it's exceptional. It has knowledge leaders. It's got the full brand spectrum. So I think it's really impressive when you look at the entire product portfolio. So you've done a really good job of putting that together and organizing it. And so you're looking as you move into not new markets, but you increase the product spectrum and brand extensions. It's a little bit easier because you have the brand recognition, and then you can kind of push out the additional products, whatever they may be, whether they're specialist or on the maintenance side. One thing I guess probably maybe for both you and for Sara is talking about the advertising promotion. Not looking at the company, I would think that would be a good place to invest, and that seems like that's what's happening, kind of creeping up a little bit. Do you expect that's going to be sort of a new run rate as you premiumize the product portfolio? You're seeing a better return on that investment. Is that kind of fair to say? And then over time, do you think it's going to be higher than 5%, or could be with the right reinvestment rate?
Yeah, so we don't think it's going to be much different to what it is today. And so we're guiding to around 6% this fiscal year. It's always been within a range between 5 and 6%, more on the 5 to 5.5%. And so the 6% number really reflects some of the investments we're making in our major growth markets, such as China and India, where we're investing perhaps 10% of revenues to drive faster growth. And the sort of programs we're doing. I mean, our strategy is just so simple, really. It's just, we expand distribution, so we make WD-40 easy to buy, whilst putting cans in the hands of the right target end users around the world. And so, if you take a market like China, that we simply make the product available to buy in double-digit growth each year. So thousands of new outlets each year, just expanding distribution. But then making sure that we're sampling. And so China, we're sampling about 25 to 30,000 industrial factories each and every year. And we're converting about 25% of those. And then it becomes just like an annuity over time. You just continue to do that. And so that acts as a natural kind of hedge to whatever's going on in the economy. And we're one of the few brands that continues to grow in double digits in China. And it's because of the strategy. Whatever's going on in the economy, we're still building distribution and driving end user penetration. And so that does, we are pretty resilient in downturns as well.
You brought up a good point about the direct versus indirect. I know, last year you added Brazil as a direct market. You've talked about that as being analogous to, you expect to develop like it's developed in Mexico. Maybe talk a little bit about how you expect that to progress. And are there other markets? You have other markets where you're sort of hybrid, you're direct and indirect, which I think is really interesting too. Maybe talk about the opportunities there over time, and you talked about Brazil, but might be other markets you could convert in the future to direct from indirect?
Yeah, so just going back to that kind of tracing that path. And so, Mexico, we took as a direct market 4 years ago. We took that from 7 million to nearly $26 million in 4 years last year. Brazil was a royalty market, and so that will go from $2 million as a royalty market and should be in the first full year of operation $15 to $17 million, and has the scope to be a $30 to $40 million market over the longer term. And so these are significant accelerations in our kind of growth trajectory. And so it's not always a question of is it direct or not. It's really just looking at the top 20 growth opportunities around the world. And so, and what's the quickest way to growth? And we can't do it all ourselves. And so I think of some of the excellent partnerships, the strategic partnerships we have around the world. And I'll highlight one in particular, which is India, where we work with a local company, a company called Pidilite, who are a leading business in India, about a $1.5 million business, 1,300 salespeople, obviously more than WD-40 Company, right? And so they just give us a really strong in-market knowledge of how to grow brands in India. We have good, strong brand power in India already, but they bring us a distribution power and the know-how of how to kind of bring in the Indian end user. And so we spoke about our sampling program in China, reaching 25,000, 30,000 industrial users a year. They're able, because of their scale, to reach 140,000 end users a year, and they're converting about 40% a year. And so, the answer isn't always a direct or indirect. It's really what's the best solution to drive the fastest growth in each of the individual markets. And there are other markets out there. Indonesia, we now have a hybrid strategy where we have a very strong local distribution partner, but a couple of folk in market alongside them, and that's working very, very nicely. So we're kind of in the process of just experimenting with different business models and seeing what kind of works best around the world. We have so much opportunity; it's phenomenal.
Yeah, like I said, I mean, you've talked about the $1.2 billion TAM globally. It seems a little bit, I mean, it's probably conservative given all the different brand extensions, and plus the low market penetration. Some of these emerging markets are major parts of the world. So, I guess that's to be determined. But it seems like you have more runway than the 1.2 stated. 1.2 billion stated. So
yeah, sure. So the 1.2 billion is multi-use product. We spoke about the benchmark opportunity on specialists, which is about a $600 million opportunity, and so that's where our focus is, right? And so it's such a strong focus on organic growth. All of those opportunities. It's first you build the WD-40 brand equity. Once you've built the equity, then you leverage it with a core with the WD-40 specialist extension, and so leveraging those digital tools to penetrate and grow it even faster.
You've been with the company a long time, I think since '91, Stephen. So when you see this trend toward premiumization, it seems like there's a serial correlation. Like once you kind of get on that pathway, it's sort of, I want to say self-fulfilling, but companies usually continue along that because you've kind of educated the consumer. Okay, there's value in this, and it's obviously beneficial to your margins. Is there any reason why, that trend wouldn't continue?
Absolutely not. We still have a huge runway ahead of us. So in terms of our WD-40 multi-use product premiumization levels, we're only at, I think it's like less than 40% of units globally. And so, the classic can, right, without the smart straw kind of system, still represents 60% plus of our volumes around the world. And so there's a lot of markets and end users to convert. I mean, it is one of those beautiful stories where the end users love the premium format. They offer them convenience and ease of use. And then our retail partners around the world love it because they're able to grow their category sales and profitability. And we love it because everybody's happy and our gross margins are much healthier as well. So it's a win-win-win situation.
Yeah, maybe I think I asked this question about innovation and product development. When I went to the website, there were a couple of new products that you were sort of displaying. Maybe for our audience, just kind of talk about some of the things that that you're working on. We might see at our local retailer over the next couple of years.
Yeah, so the key thing we're working on is just selling what we've got, right? And so our kind of targets we've put out, mid to high single-digit growth. You've seen that potential we've got we don't need any new products at all to drive and achieve our targets, right? And so it's just about expanding distribution, taking the core brand globally and then leveraging WD-40 Specialist around the world. Having said that, some of the new WD-40 Specialist products, we are experimenting with kind of bio-based products. And so we put out a bio-based degreaser, our WD-40 Easy Pods, which you can see on Amazon and buy online, which have got rave reviews. And so that's been kind of a foray into kind of non-fossil fuel-based products, right? And so that's going to be a big part of our push for the future. Is you're going to see more bio-based lubricants, right, under WD-40 Specialist range around the world. And so that's one area we're kind of investing in. Yeah, delivery systems for the core product have always been very successful for us. And so if you look online, you'll see the WD-40 pen is out there, which is just like a pen, right? But it's a new distribution. You can put it in your pocket, and if you're a maintenance guy, put it in your pocket and walk around a factory. And it's very popular with female users who can keep it under the sink in the kitchen. It's much less kind of overspray than with an aerosol can. And so that's an innovation that's kind of out there. But the real push on new products is just really getting existing WD-40 Specialist products into more places, and then innovating for sustainability with bio-based formulations going forward.
It's pretty interesting. I saw, like you said, you had the full, a brand portfolio of the different, because there's clearly, other products and different uses on the shelves. Say, just go to your local Home Depot or Lowe's, and like, WD-40's got a product for that, and WD-40's got a product for that. Now you just kind of go down the line. So it'd be interesting to see if you can get some more, shelf facings there. It would at least compete or displace some of the other smaller players. So
sure. And so that's a big push. And in terms of we were a one product company for 45 years. All we sold was WD-40, right? The classic multi-use product. And so WD-40 Specialist, it's been out there for 12 years now, but we're only really getting going. And it really offers us exactly that opportunity, right? And so in terms of classic retail distribution and in-store kind of shelves, we're going with a category play now, right? Versus just selling one product. We're selling an entire category solution. And so a range of products to surround the hero product, and it doesn't cannibalize the sales, the Specialist range, hardly at all. They're complementary products to the core product. And so every can of WD-40 Specialist we sell around the world is really taking competitive market share away from other products.
And that will be the mantra going forward. You sort of alluded to this 2030 plan to lower overall emissions. Is there any cost impact of that, or impact on gross margins? We'd assume some of this stuff might cost a little bit more to put in a can.
Well, so that's all part of the equation that we look at, right? The trade-offs of, what we're very clear about is, people buy our products because we sell great products and their performance. And so, anything that comes out with the WD-40 logo on it has to have outstanding performance, be best in class within its category. And so as we look at that, I mean, the bio-based product we already brought out met our margin expectations. In fact, any innovation we do, we ask for a margin accretion. And so we're always trading up the gross margin expectations. And so, they may cost slightly more, perhaps, right? And it has to be, consumers have certain pain points and limits. But yeah, so far, kind of what we've looked at, we see the opportunity to continue to premiumize with innovation, but also to meet our margin expectations, even if the cost may be slightly higher for some of these bio-based.
I mean, there's definitely deficit. You go in any kind of retailer shelves, there's a deficit of this product. I mean, there hasn't been a lot, maybe good or bad. There doesn't seem to be, there's been a lot of innovation in the category. You guys are leading the charge there. So as first movers, you can really charge that premium for these products, it would seem.
Yeah, absolutely. And outside of the pro, I mean, the pros know these products inside and out, right? But you've got your DIY user can find the category quite technical and a little confusing and daunting. So the reassurance of the WD-40 brand, right, reassures a lot of people, oh, it's from WD-40, it must be a great product, and I can try it. And because of that, they have confidence to take what can be sometimes some quite technical products, perhaps.
Yeah, that's excellent. I wanted to just talk a little about, and you alluded to this, Sarah, I'm sorry to shift back and forth, or to Steve, talking about the dividend. Now, I know it's been trending between 50 and 52% sort of, but maybe talk a little bit about, I mean, is it purely in line with the sort of the earnings, or is there something, other factors that you decide how much you're going to raise it in any given year?
Yeah, I mean, we have a kind of a simple, right, where we target above 50% of our net income as kind of the starting point. And then, you know, I sit down with my treasurer and we really map out kind of the next 3 to 5 years with our strat plan.
Oh, wow.
And start to look out and say, okay, so if we're meeting our growth targets, right, we have what we are striving to do every year is to raise the dividend by some extent, right? And we think if we can do that, we are being successful as a business. And so what I caution is like, we try to not get ahead of our skis. We call the dividend a marriage and the repurchases just dating. You can kind of ebb and flow on your repurchases, but we want to make sure that we're being able to deliver a dividend north of 50%, that on an annual basis, we're increasing it, but we're not getting too far ahead of our skis. So we're really mapping out what that next 3 to 5 years looks like to make sure that we're not getting too far ahead of our skis in the decision as to how much to raise it in the annual period.
That's great. That's great. I don't see any questions from our audience, but I want to be respectful of everybody's time. We're getting close to the top of the hour, but I would just kind of close in this. And you'll probably, you'll get some laughs here. It's often said the only 2 things you need in life is duct tape and WD-40. If it moves and shouldn't, use duct tape, and if it doesn't move and should, use WD-40. And surely there's a reason for that. I would add that WD-40 does dissolve remove duct tape. So in addition to, I found also cleaning headlights, those fog headlights.
Yep.
I don't know how long it lasts, but it worked. I mean, it's pretty amazing, actually.
It'll also take bugs off your headlight in the front.
Yes, exactly. Bugs and what have you. So, but I want to thank the management team, WD-40, for their time today. Really appreciate it. I know our audience attend as well. And, we're going to have this posted to our YouTube channel and also a link to this presentation on our website. And again, I want to thank everybody today for participating. And
oh no, my father-in-law is now going to ask if I tell him that this is on YouTube.
You don't have to. You don't have to give the link. I mean, I'm not going to. What's your
my
father-in-law's name? What's his email address?
Right, exactly. Oh, Richard. He's just going to be so. I mean, mostly he just loves to hear Steve talk about the business, but that's going to be, yeah, that'll be. Oh, he'll love that. My mom actually would really like this.
Well, that's wonderful.
She doesn't get to see me in action very often, so I may actually take you up on sending the link.
It's so great to have a company that's so dedicated, both to shareholder returns and dividends, and just a great company for such a long time. So again, we really appreciate your time, and certainly Wendy for scheduling all this with me and coordinating. So I want to thank everybody today for participating, and have a great weekend. I know it's going to be Friday tomorrow, but look forward to further success and further quarters with you. So thank you very much for your time participation today.
Thank you.
Thank you.
Thank you, everyone.
Thank you. Bye-bye.